Hey, what's up, y'all? Uneducated Yogi here with One Family Investing. Welcome. Today, I'm going over a little bit of the account. We have a little bit update here. I want to show you what I got going on with SoFi. It seems like I'm going to be sharing my personal account with y'all more than what I thought because as I get into options trading, I think I'm going to be doing it in here. If I'm not going to be doing it in here, then I'll do it over here. But as of right now, this is where I think I'm going to be doing it. And let's just say, I got to be able to go in here and show y'all how this works. But I'm not there yet. We got our ICP still looking good. So we got our cryptocurrencies. We got our stocks. I'll share what's good about what's going on with our stocks in the Charles Schwab account. Got this cool thing that's happening with Bitcoin. I'll share what's going on with that. I want to go over this. I'm going to give an honest review. This was 3 days ago. And since I'm going to be possibly using SoFi as a option trading stock to begin with, I'm showing y'all live like what I would do before I started. So we're gonna check out this video together. I'm either gonna talk mess or not talk mess, and then so we're gonna go over those things. And before we start, I just want to say, if y'all can if y'all can subscribe, that'd be super awesome. I have a goal right now to get to 50 subscribers, and it's gonna make me be able to do live streaming. So without further ado, I say let's do this review first, but then just one more thing actually, two more things. There's gonna be a bonus at the end, but I wanted to share with y'all in the last video, I think it was in the last video, this person right here, I'm following his option trading for beginners. It's a 6-hour course. I'm at 4 hours and 33 minutes. I should have been done with it already, but I mean, I got some good stuff in here. I've been taking some good notes. And again, what's cool about y'all coming to this channel is I'll be going over all this stuff. So this is all like the notes I taken so far, but it's cooler that I have the notes and you guys see me do what this is saying, and then I just explain it to you. I don't think I want to go over all these notes unless that seems interesting to y'all. Like seriously, put in a comment. Even if one person goes like, "Can you go over some of it? Can you go over all of it?" Thank you for not going over it. I can't wait to see it. Give me some feedback because then I'll know what is appreciated by y'all. Okay, so anyways, so I got all this stuff. I'm 4 hours in, 4.5 hours in. I'm going to finish that, but that's my notes so far. I just want to share that as well. And then there's going to be a bonus at the end, but there's been some really good
All
stuff
right, man.
coming from
Today we're
this
gonna
guy.
talk about a trade that we executed in my Patreon group. Y'all know your boy.
We're not going to watch that one right today. Okay, so without further ado, I say let's watch this video together real quick because it will be one of the option trading strategies I use is SoFi. That's what it sounded like so far. Anyways, let's go.
Market in order to pay for my entire lifestyle. Now, first things, what's up, traders? So today I'm going to tell you why I think SoFi could be a stock that creates millionaires and what option strategy I'm using in order to get access to it. Now,
okay, so right away, it's cool that he's talking about an option strategy. Again, I don't know anything about this video. So this is one way that I do research and then I get ideas and, I get help in different ways. So this is one way, and it's cool that he said that right away.
if you're new to the channel, my name is Rashad. I am a full-time options trader, and I bring in multiple six figures a year from the stock market, and I use the money I make from the stock market in order to pay for my entire lifestyle. Now, first things first, I need you to smash the like button right down there. Our last few videos have been getting around 400 likes, And I need at least 500 likes for this video, which means I need you to help me out. All right. But also you can subscribe to the channel. We have a lot
It's 3 days ago. We're gonna like just because he's putting out information and we're just gonna show some love. It's one family investing. Remember, we're all out here to show love.
of great videos coming up here shortly. And do remember that I'm not a financial advisor and this is not financial advice. All trading comes with risk. I'm just showing you how I've built wealth over time. All right, so first things first, SoFi Technologies, ticker symbol SOFI, is currently a $13 stock. We can see it's down about 1% today, and it's currently sitting at a market cap of about $14.6 billion. Now, if you're not familiar with SoFi, they provide a consumer-focused financial technology platform, and really they're an online bank, and they have a multitude of different loan products, but they do utilize technology and AI in order to determine a potential borrower's creditworthiness. And not only do they use their AI software for themselves, they also lend it out to other financial platforms and make money off them as well. Now, currently you can see that their PE ratio is 80.76. So they are pretty expensive currently. And I really don't like paying an 80 PE ratio. And so in order for this PE ratio to come down, you need one of two things to happen. You need one for their earnings to grow, or you need for their stock price to go down, or preferably a combination of both. And we can see that their earnings are absolutely growing. If we scroll down here, we can see that last year's earnings for this quarter was 1 cent per share. And for this quarter, they are expected to do about 6 cents per share. So that is over a 500% increase year over year. So they are absolutely growing their earnings. But if we look here, we can see that their financials have been growing over the last 5 years. And so these dark blue bars here are the revenue for the company over the last 5 years. So we can see over here, the year ending December of 2020, they had $0 of revenue. And then the year ending December of 2024, they had $3.7 billion in revenue. And we can see that their earnings has also grown as well. So the year ending December of 2020, they lost $650,000. And in the year ending December of 2024, they made $498 million. So that is massive growth. They grew 265% on their earnings just last year. And this quarter upcoming, I just showed you, they are expected to grow 500%. So that is great. Their earnings are obviously growing. Now, let's take a look at what analysts think of the company currently. All right, so there are 19 analysts that are currently covering the stock, and collectively they have it as a hold. However, if we look at their price targets, we can see collectively at the mean target, they have a price of $13.97, which it is currently trading for $13.09. So it is cheaper than their current mean price. Now, there are a few analysts that have it as a $20 price point, and then there is one bearish analyst who has it at a $4 price point. But collectively, which is the number that I look at, the mean target is $13.97. So that is the price point that I want to keep in mind. Now, one thing that I always like to look at is, are insiders putting their money where their mouth is? And I always pay attention to insider buying, where I don't really pay attention to insider selling. And the reason for that is, people will sell stocks for a multitude of reasons. You know, it could be they want to buy a new house, they want to pay for their kids' college education, they want to go on a huge vacation. There could literally be dozens of reasons why a person sells a stock. However, when a person buys a stock, there's only one reason they do that, and that is to make money. So I always pay attention to when somebody who is on the inside of the company buys shares. All right, so I took a look into SoFi, and although there's been no buys this year in 2025, there were 5 different buys in 2024. Now, 4 of those buys were the CEO, Anthony Noto, and he bought 4 different times between the month of May and June of last year. Now, one thing I will point out is that he paid around $6 for the shares that he bought. And obviously that was a good buy because the stock is currently trading for nearly double the price that he paid. But we can see that every time he bought shares, he spent around $200,000 doing so. And after his last buy, he owned 8.5 million shares. However, another insider, Eric Schopenhauer, looks like he purchased 30,600 shares on December 16th at a price of $16. All right, so he believed with whatever information that he has that the stock was a great buy at $16, so much so that he spent $500,000 buying those shares. And that was an increase. He previously, before buying it, he had 30,000 shares, and now he owns 46,000 shares. And so that is good to know. But now let's take a look at the chart. So here we are. These are daily candles, and we're looking at the last 6 months. But we can see it's been in for a little ride. We can see it got as high as $18.42 on January 24th. And then it got as low as $8.60 just last month on April 7th. All right, and since then, it's been mostly on a nice little uptrend, just like most other stocks. But what I want to point out here is two different data points. So we can see this blue line here is the 200-day moving average, and it's currently around $12.15. And typically, the 200-day moving average is one of the strongest points of both support or resistance. And we can see that even going back here. We can see the stock dropped, it hit the 200-day moving average, and then immediately popped back up. And then it followed the same thing here, is it hit the 200-day moving average and it popped back up. But then, of course, with all the tariff headlines during the beginning of April, no support could withstand that. And so it did pop down around that time, but we can see that it is back above the 200-day moving average. So one, it should see some good support around $12.15. But also another data point that I like to look at are the Bollinger Bands. And the Bollinger Bands are these black lines here, but they just aim to show you the price range that a stock is expected to trade within. And so I want to look at this bottom Bollinger Band here, and we can see that it's at a price of $12.55. So between that $12.55 and the $12.15 mark, we should see some good support. And so what I think I want to do is I want to go ahead and sell puts at a cheaper price and agree to buy the shares at those cheaper prices, and in return, I'll get paid to wait around. And so for those who are new to options, let me quickly explain selling puts. However, if you
Okay, so this is a lot of the stuff that I'm going over. I actually like this video, y'all. So this is really cool. So when he was going over, like, there's a lot of good stuff in here that I think I'll be breaking down later. Let's go back to 625 in
are
a second.
experienced with
Um, so this Bollinger Band, I just found out about this thing that goes around like this. So so this is telling us like on average where the range of the stock should be in. So this bottom part, like when it goes outside of this, so the stock on average should be inside these. And I have a low or a higher number than him. So my Bollinger Band would be bigger. And I think that's because the person who I learned it from, he said is more conservative that way. So this is less conservative, I believe. That's how this works. So meaning I think he trusts his system in a certain way to where it doesn't throw him off. Like he knows how to still read it. That's what I'm gonna run with. Because the person up here, he said to put 30, and I was gonna rock with 25, so I think I might still go back to 25 then, just to be in the middle. Like I said, I don't follow just one person. I feel everything out myself and I learn myself, but I start by actually learning. We can't start if we don't learn, right? So here we are. So what this is saying is when the stock goes outside of this Bollinger Band, that it's likely that it's gonna go in a different the other direction, because these the top and the bottom of this is where it should be, or within that, basically. This is a pseudo, like a bad way of explaining this, but I hope y'all get what I'm saying. So basically, every time this goes out, it's expected to go back. It reached kind of the top, is going to come, and it could have stayed here, but it went down here, and now it's going back. It's going back up a little bit. It reached the mid, the average, and then it went back down, and now it's going back up. It went too high, and then so it's like this. So this Bollinger Band does something. I just learned this recently. I just thought it was tight. But he is showing us stuff without necessarily breaking everything down to where it takes so much time. So I like what he's doing. He's giving us some good information based off of all the stuff I've been learning thus far.
5 cents. And so at those cheaper prices, and in return puts at a cheaper price and agree to buy the shares at those cheaper prices, and in return I'll get paid to wait around. And so for those who are new to options, let me quickly explain selling puts. However, if you are experienced with selling puts, make sure you stay till the end because I'll show you a better way to go about it. So when you sell a put, there are two main objectives, and it's one, to generate income, or two, to buy the underlying stock at a cheaper price. So when you sell puts, you either one, want to make money, of course, and or two, you want to buy the stock at a cheaper price.
So how that looks is, if I was selling a put on SoFi, and he probably go over this, but I want to show y'all, like I say, it's a reaction video. I want to show and share and all that. So SoFi right now is at 13. It says share price 1307. So if I was to buy a put, that means I'm looking to buy this stock at a lower price, meaning it can go down. So if I click here and add one contract, so this one contract for 32 cent, you get 100 shares. So 32, you know, 0.32 times 100. If you do it on a calculator, you get $32. So it's not off, just so you know, you see me do it. But basically, there's 32 cent. I get I get to basically manage 100 shares for an extended amount of time that I put up here. So expiring on in 6 days for this one, basically. So this is within 6 days. I believe this stock is going to go down to $13. If it goes down to $13, um, I won, this this bet. I'm working on how to understand the profit. I'm not gonna lie, so I'm still learning that. But just so you know, the basis of what he's saying right now, he is buying a put. That means a put means it's gonna go down, and I want to hold the stock while making money. So now he's going to show us that. So that's what I'm learning. So I haven't gotten that all down, but just so you see this part, you can go into Robinhood, type in SoFi, you click on the options. When you go to the options menu, you're either going to buy a put or you're going to sell a put, or you're going to buy a call or you're going to sell a call. Okay. So, anyways, we'll go over that in more details later, but that's the basis. So, the put right now.
Selling puts is literally like selling insurance for stocks. And here's what I mean. Let's say I have ABC stock that is currently trading at $100 and I like the company and I want to purchase the shares. So I could potentially sell a put at, let's say, $90. And as I'm selling a put, I'm essentially saying to the buyer, hey, I will buy your shares of ABC stock that are currently trading at $100 and I will buy them from you if the stock crashes below $90. However, for doing so, you have to pay me, let's say, $200 right here, right now, and this contract is only good for the next 30 days. And from there, two things can happen. Let's say ABC stock stays above $90, then we just keep the $200 we were paid and we go about our day, and we can do that trade over and over and over and over again. However, scenario number two is if ABC stock drops below $90, then we still need to purchase the shares of ABC stock at the $90 that we agreed upon. However, we still keep that $200 that we received. And so as a put seller, you are essentially selling insurance for the stock. And just like with your car insurance that you pay every single month, the insurance company keeps the premium that you pay them whether you get into a car accident or you don't. And so here's a quick example of selling a put with a real stock. So let's say Apple stock is currently trading for about $220. And let's say you're interested in buying Apple stock at a cheaper price. Then what we could do is we could sell a put, let's say at $200, and that would be our strike price. And we could select an expiration that is 30 days out. And for selling this put, we would receive $150 immediately.
So I just want to show how that'll look. So, I mean, Apple's probably at a different price, but, let's just really. So let's say I'm seeing Apple stock at whatever price it's at. So I think after this, we're going to end this video and then I'm going to continue it. But okay, so I go here, I say trade Apple option, right? And then what he's saying is you could sell a put. And he's saying, so Apple right now is at 195. And let's say we believe Apple could go down to, and we would look at the charts and everything like that. Okay. We look at the Bollinger chart. We'll do that before we come here, but then we'll say, okay, well, it's around this price. So then let's just say we saw that it could go down to 192, but might not. So what can happen is um it says credit. So I would get, if I was to do this, this is saying, "Hey, I'll take 225, and if the stock drops at my strike price, which is 192. I thought it was going to be over here. It's not over here. So what I believe is going to go from 195 to 192. If it does go down to 192, then I gotta buy those. I gotta buy the stocks at at this price. I believe that's what it is. At this price. Um, and then if I can't, so if the price doesn't go all the way down, then I pocket this, and I don't have to buy the shares. But me, see, now I'm confused a little bit. Okay.
Immediately right here, right now. And so if we look at this profit and loss chart over here, so Apple stock is currently $220. If the stock price were to go up, then we just keep the 150 we received. If the stock price stays the same, then we just keep the 150 that we received. If the stock price goes down some, we still keep the $150 we received. However, if the stock price dropped below our $200 strike, then we will be forced to buy 100 shares of the company per contract that we have. And that's literally how selling puts works. However, now let's go and take a look at the few data points that I look at prior to selling puts. But all right, we know that the Bollinger Bands have a low price of $12.55. So now let's look at the expected move. So now we're looking at the expected moves, but I want to go about 30 days out. And so we have this expiration here that is exactly 30 days out. And we can see that it has an expected move of $1.35. Now, the expected move is just the largest move that the options market currently has priced in for a specific stock by a specific date. And we can see for SoFi, for this date of 30 days out, they expect it to either move up or down by a maximum of $1.35. So on the lower end, that puts us at about $11.74. All right, so the Bollinger Band said $12.55. The expected move shows $11.74. And normally I would select the more conservative of the two. And so in this case, there would be the expected move because it's lower. However, both numbers are so close to each other that we may make an exception for this. But let's head on over to Thinkorswim to look at our last data point. But real quick, if you know anybody who could use help generating income off the cash that they already have, tell them about the Trader Freedom community. We have strategies all the way from 0 DTE for our day traders, all the way up to monthly income for our more busy professionals. But not only will they get my exact trades when I enter them, they'll also get my full options course from A to Z. Thirdly, they'll have access to ask me questions at any given time. And lastly, they'll be within a community of other traders who all have the exact same goals as them. So if you know anybody who needs help generating the income off the cash that they already have, tell them about the Trader Freedom community. The link is in the description below. All right, so now we are in Thinkorswim, and I've put up the options chain for SoFi. And so next thing we need to do is select the expiration date that we wanted to use, which was 30 days out from now. And now I want to look at the delta. So the delta is this column here, but that just aims to show you how much an options premium will move per a $1 move in the underlying stock's price. All right, so for example, at this 0.45 delta, which is at the $13 strike, that is saying that this options premium will move about 45 cents per every $1 move in SoFi stock price. However,
Okay, it's getting all complicated and stuff, but I will say this person is doing a good job. I can't wait until I start trading my options because one, I want to be able to break this down more specific to y'all. But again, y'all seeing me as I am going through this, so this is actually giving me a lot of confirmation on what um, where I'm moving. So uh, let me see, because all this is like technical stuff.
and select the amount of contracts we want to do. Now, this is totally up to you and your account size, but just remember, if the stock price were to drop below our strike by the expiration date, then we are required to purchase 100 shares of that company per contract that we have. And at the strike of $12, that would be $1,200 per contract that you will be required to purchase if the stock price does drop below our $12 mark by the end of the expiration day. But let's say for the purposes of this video, we'll do about 5 contracts for today, and then I may sell more tomorrow, and then the next day, and the next day, until I've reached the amount of contracts that I want to sell. All right, but we can see at the mid price, we'll receive 34 cents per share, which is $34 per contract. And if we're ready to go ahead and submit the trade, we can go ahead and click review. However, let's look at the P&L chart. So if we look at the number at the top left, we can see I will collect $170 total for this trade.
Okay, so that last part that I was, yeah, so if it does go down below over here, when I was over here, like the 192, then we would have to buy 100 shares per contract. So there'd be one contract, we have to buy 100 shares. So yeah, that's how that works. And yeah, that's possibly 195, so 1900. I mean 19,000. Yeah, 19,500. So yeah, so we would have to do that. Let's just 192 times, yeah, 19,200. So yeah, so it's good to know what we're doing, because what I just did right there, like I didn't know the full loss. Like I did, but I didn't want to say it because I haven't done it enough. Because it threw my brain off. Because why we're doing this, um, it's a way to make a premium, and then is a way where you can make a premium and get out of the contract, or roll the contract and keep the contract going. That's what I'm learning in this other one. But anyways, so this is why it's important that we review, we practice, and that's what I'm doing. I'm practicing. I'm learning different ways to see the option trades. So that's my version. I mean, other people got different versions. But anyways, I'm glad he just went over that at the end there. Let's just listen to a little bit more.
Right? And that number shows you how much the contracts will be worth by the expiration date. Now we can see if the stock price stays right here where the red dots are at $13, we just keep the $170 we were paid and we go about our day. If the stock price goes up, we just keep the $170 we were paid and we go about our day. If the stock price goes down some, we just keep the $170 we were paid and we go about our day. However, if it drops down below our strike of $12, then the contracts become worth less and less and less. And then it looks like our break even point is right here at around $11.60. And then assuming if the stock price were to go down even further than that, then the contracts would be worth less and less and less. However, in this scenario, you do not care because you were fine with purchasing the shares of the company at the strike price that you selected. All right, so if I were to place this trade here right now, in my mind, I'm going, I would love to purchase the shares of SoFi at $12 at a later date. And either way, I get paid to wait around. All right. And when you have that type of mindset, that's when trading becomes very unstressful, because I really don't care either way. I am going to sleep like a baby if SoFi stock goes up, and I'm going to sleep like a baby if SoFi stock goes down. I really do not care. But what I do know is I do like to get paid to wait around. And if you were one of the people that loved SoFi at $18, then you should absolutely love it at $12. Because
So this is very significant what he's saying right here. So at the end here, um, so he's saying like, if it when it gets below our strike point, so if it stays above, then it's cool, because we just pocket this money, right? We pocket this. Um, so we pocket that. If if it goes below our strike price, like down here, if it goes below, then um, we start losing like the value. I think it's called the value of the contract, but we're okay with it, because if I can get if I can get Apple at 189, for instance, that's okay with me. because I'm getting it lower than what I know it's gonna get to. All right. So it's basically, I like how he put at the end. So over here, we have a strike price of 192. Okay. So then we keep our expected profit of 226. You see that up here. Okay. So if it stays around 192 or above, we just collect. So in 6 days, if it stays at 192 and above, we collect $226, and that's cool. We just keep it. Um, and there's a point to where if it goes above a certain number, the 195, uh, I believe we get something, or we just keep the 226. We'll leave it at that. But the thing is, I want to share the risk. The risk isn't that much because as it's going down, we only did this position because we know that we wouldn't mind buying the Apple shares, the Apple's, So even if it goes down, it's okay. The we'll end the contract. We'll buy the stocks. So we keep the premium, and then we buy the shares, and that's okay. We made money while sitting and waiting to figure it out. If it goes below, even if it goes below a little bit, we still make something. But if it goes below 190, a two almost 3% drop, then we start. So it's at 195. If it goes to one, yeah, 190 and below, then we got to buy it. We got to buy the shares, and that's okay because again, we went into the position going, I don't mind buying these shares, and that's why I'm going to be using SoFi because I am what they call bullish on with SoFi. Like I believe it's going to be going up, so I'm not concerned with me buying SoFi. Um, but I got to make sure I have enough, income in here. So that's what I'm working on now. You'll be seeing me grabbing my checks, my little itty bitty currency that I get from my check. I'm putting them in Robinhood and Schwab, as you can see here today. I put $30 in Robinhood, not much, but that's what I'm also sharing. I'm showing you guys that we just put it in there. Even if I can't make a move today, I put the money in there so that I could make a move later. Okay. Um, oh yeah, I guess y'all didn't see that. But anyways, on that last page, I'm starting, the sheet to record my income or my investment progress so I can share with y'all later because that's gonna just keep stacking. But anyways, I think that's gonna be it for this video. So this next video, I'll go over. I'm gonna have another video where I'll go over this other stuff. But I hope this was somewhat in, informational, going from like the new Bollinger right here, Bollinger Band, the top and bottom, highs and lows of the Bollinger Band. Um, I hope that some new info in there, and I'll put the bonus video in here because this is all about risk. And I know I just made it sound like you shouldn't risk because it seems like I don't know what I'm talking about. In one way, I don't, but in another way, I do, meaning like to the extent that I know what I'm talking about, I know what I'm talking about, but I'm admitting to where I'm going to be, needing some more work in, and that's okay. Y'all going to see me do this. But let's just play the bonus video I was going to play. Uh, this is from the channel Earn Your Leisure. We've talked about them before. Freaking awesome guys. And there's these people, uh, option trading explained. But this section, I just went over something really cool. It's about risk management and stuff like that. So let's end this video with understanding that we can all take risk, but we got to take calculated risk, but we don't take risk without learning. Remember, one family investing is we learn, we invest, we profit. Okay, we got to learn first, and then we invest, and then we profit, or we invest and then learn at the same time, because you could be a big risk taker like me. But let's learn, invest, and then make profit. But we can't do that without understanding that it's okay to take risk and what risk means to us. So here's a video. And again, like, subscribe. After this, I'm going to exit. So see y'all later.
What would you say is the biggest thing that's holding people back?
I'll tackle that. So the one word I hear a lot is this word risk. It's risky. And really what risk means is running into situations knowledgeless. If you don't have the knowledge, then
Yo,
for you,
Josh
it's
is
risky.
barred up. Say that again. Hold on. Look, you gotta look at the camera and say that. That's a bar right there.
So the word risk means running into situations knowledgeless. The reason you think it's risky is because you don't have the knowledge. But once you have the knowledge, you become a master, and then you profit from the knowledge that you have. See, the thing is that when people have the knowledge, they take the skill and they turn it into money. So I tell people, like, listen, stop saying things are risky. First ask, how can I learn what I need to learn to become as good as that person? Like, we have competitions. Watch me say, oh, I had a 19K day.
Yeah.
I say, I'll catch you next week.
Right.
Like, that's the kind of energy you need to be on. So you need to learn the skill, and that skill will pay you for life. And the thing about skills is that you can pass it down. He learned it, he taught it. I learned it, I'm teaching it.
Yeah.
Right? And everybody in the community, if somebody learned it and each person teaches somebody else, the whole community would come up as a whole. Why? Because we all have a skill that people have been playing for years. Like, options is not new.
Right.
Options has been around for like decades.
Yeah.
But just now, 2020 is when people are starting to learn it.
Yeah.
But listen, it's better to be a participator than a spectator.
Yeah.
Spectators get killed. And they're like, oh, that's cool. No, you need to get in the game and actually participate.
Right.
And then start making profit.
Yeah, no, I love that because I mean, rightly so. There's an African proverb that says, if you want to go fast, go alone. If you want to go far, go together.
Yep.
And
Okay, so that was it, y'all. I hope that did a little bit something. Risk is running into situations knowledgeless. Thought that was so nice. And I mean, I'll put a link in the description of this full interview. It got a lot of nuggets in there. Uh, Again, all these people I'm sharing, y'all can go follow them. I think I add a little bit something different of all the people I'm sharing, but please don't hesitate to look into them, and remember, just choose one though. Choose one or two people to follow. This is like a resource center, like a bunch of people, but that bunch of people, you should be diving into one or two and then just running with that. I'll be, again, sharing what I'm doing here. I could be one of the people you follow, but if you like coming here and you on it, I think a lot of new people would be coming here. But if you found this channel and you're somebody who's like in the game already and serious, I'm sharing a lot of people who you can also follow. But I have no connections with any of these people, like memberships and all the other stuff. No connection. And I'm saying that because I read some of these comments, and you know, some of them were good, and then some of them was talking about how whatever they were offering, like they didn't get their stuff yet. I ain't got nothing to do with that. I'm just sharing good knowledge with good people, uh, and hopefully these are good people who we're sharing, right? So, anyways, I thank y'all again. Uneducated Yogi, One Family Investing. Please like, subscribe, and I'll see y'all in the next video.